All right, let's talk about the Aussie 200 market and what Mosaic offers in terms of trading that market and the patterns that we're able and hoping to find via Mosaic in that market. Okay, so what I've done is essentially I've just gone through and selected all the Aussie based columns for the purpose of this. And we'll just quickly go through and give you a bit of an idea of how I look at all these things and how the flow goes. So again, as I said in the past video, the flow is always prior day looking into current day looking into next day. Okay, so look, probably the easiest way to show this together with Mosaic as I'm going along is via chart. So where should we start? Okay, so XJO prior day. So what is the XJO? XJO is the difference between the price at 4 p.m. when our physical underlying market closed. So obviously, you know, the XJO is essentially, you know, the basket of the top 200 companies put into one singular price. You know, where does that close at 4 p.m. when all those shares stop trading? Okay, that's the price here. Through to 4 p.m. the next day, where that same basket of shares stop trading the next day. Okay, so it's literally just looking at, this is a real money indicator. Okay, so futures, all this movement outside of these hours is essentially speculation as to where that XJO is going to close at 4 p.m. the next day. Okay, and that's why, you know, trading these markets gives us such an edge, in my opinion, because it does have an anchor. It does have underlying market that people are speculating as to where that market's going to finish. So that obviously creates opportunities and patterns day on day on day if you're looking at the data. So XJO prior day, obviously if we're opening up today and it's 10 a.m. in the morning, that's telling you what the XJO closed at the prior day. Okay, so this price here compared to 4 p.m. the day prior. Okay, it is a proxy. It's going to be a little bit different than what you might see on the news, etc. But it's literally just using 4 p.m. to 4 p.m. Okay, where has that closed? Because obviously this pricing, the Aussie 200 pricing is, you know, derivative of the SPY, which is a derivative of the XJO, you know, those top 200 companies. So that's how they're kind of all linked. So XJO prior day, futures prior day. So all these are prior days. So I'll just explain. So we've got the XJO overnight futures dislocation. As I said, between 4 p.m. and, you know, the next morning, essentially all speculation. Okay, so this overnight move here is a dislocation from the physical market, you know, the underlying market, trying to guess where that basket of 200 shares are going to open physically the next day. Okay, so where the real money, when push comes to shove, you know, where people are actually trading and putting the money on the line with those 200 shares. This is trying to predict where that is going to be at 10 a.m. the next day. So that kind of that's obviously, you know, a function of many things: commodity moves, you know, overseas markets, geopolitical, currency, all these things basically go into this move, trying to predict, okay, well, the fair value price of that basket of 200 shares tomorrow, given all these inputs, is going to be here. Okay, so you can see in this case it was down 150 points because the US crashed and we had Iran, etc., etc. So that does create an opportunity the next day, obviously, and we see patterns time after time after time where there will be moves the next day from open based on this kind of move here. So just off the top of my head, when you look at moves to lows overnight of say 100 points, you know, the next day when we open, or when the ASX opens at 10 o'clock, 96% of the time we hit more than 10 points to day lows. Okay, and we've done that again today actually. So that's the overnight futures dislocation. The futures, okay, so day futures are essentially from that overnight close. Okay, so where people, you know, the market speculators think that we is a fair price for our XJO, through to 4 p.m. that day. Okay, so 6, 7 in the morning, Sydney time, through to 4 p.m. basically shows how wrong those speculators were. Okay, so when the real money came to play, were they pretty spot on in terms of where the market finished? You can see here that not too bad in terms of where they thought the day should finish and what the fair value price was compared to the actual fair value price at 4 p.m. This is really important. It basically tells you how far off the mark people were. Okay, so big dump on futures through the day tells you, wow, market was really actually a lot worse than what we were expecting. And then that gets you to think, well, why is that? And vice versa. Zooming in a little bit, I've got these on 15-minute candles here, but obviously overnight close, 7 p.m. Sydney time. Okay, 9:50 the SPY opens, and it opens through an auction. Okay, so that immediate price on open kind of tells you where the larger players are positioning themselves in terms of risk, etc. for the day. So big gap down here. On this particular day, they actually thought that this price of being down 150 points was not bearish enough. Okay, so they actually just wanted to get rid of risk even further, so it opened up lower. However, pre-market bid straight away. As once you get into all this, you'll find out that this is a very, very common occurrence. Big pre-market rally after that gap down. So open gap, pre-market, and then there is a column here that is the open gap net, which is basically gap plus pre-market. So it shows you where that net 10-minute move kind of ended. 15 minutes, obviously from 10 to 10:15. What happened in that first 15 minutes? Did we rally? Did we fall? Things like that. First hour, self-explanatory. Price difference between the 10 a.m. price and the 11 a.m. price. What else we got? ASX session is literally the ASX session from 10 to 4. What happened when those shares were physically trading? One thing that is probably a bit unique to Mosaic is I keep track of the last 90 minutes of trade on the Aussie, and if there's any major moves into the close. So what this kind of suggests is that there's a bit of unfinished business. Our physical market closed while there was still a bit of a big move going on. You can obviously look into this from a variety of perspectives. For me, that just gives me a heads up that the open the next morning likely going to be volatile because participants didn't get to finish what they were trying to do prior day. A lot of this is overseas exposure as well as local funds kind of squaring up before the close, given what they think is going to happen overnight. And then we just go around again. So then you're looking at overnight post, overnight move post. Obviously, overnight move post for this day will be the overnight futures dislocation pre for the next day when you're looking at the next day. Okay, so they'll be the same data value, but it just depends which day you're looking at. You're looking today looking forward or tomorrow looking backwards, if that makes sense. So hopefully I've explained all these XJO day futures, ASX session, first hour day, session range prior day. So again, if you have a really big range one day, generally that will flow on to the next day. Late move aftermarket, I didn't mention that one, but that's the move 4 to 4:30. So as participants really want to square up their books, that's also a big kind of indicator of, you can see here, red aftermarket and then sold off for the rest of the night. Some really interesting patterns around there. People are heading for the exits and what happens overnight from there. As I said, initial open gap, pre-market, open gap net, futures, ASX session, first 15, first hour. These, just while I remember, these ones are, do your own research here, but very, very predictive. If you want to reverse engineer those really, really big sell-offs and really, really big rallies, might not sound like rocket science, but these are generally a really good predictor for what's going to happen in the next 5 or 6 hours of trading. Times of highs and lows, okay, so that's rounded backwards to the 15 minutes. So essentially, if the market sells off or rallies from open, the time of session high will be 10 o'clock, or time of session low will be 10 o'clock. Session low is self-explanatory. You know, the lowest point reached from 10 a.m. price through the ASX session to the lowest price, highest price. Range, obviously just it'll be the low plus the high. It gives you the daily range. Late move, I explained, aftermarket, overnight session post, and then highs, lows, and rough times, okay? Rough times. I don't go into too much detail there, but this is going back to 2021 where I didn't really track this, but obviously with the latest data, that's all there. But that's just interesting to kind of see. A lot of the time, you know, the overnight high lows, etc., happen immediately after our market closes. And then XJO is where the physical market finished for the day. So that's the Aussie market explained. Now let's jump into the UK.